Hi, Christine.
Hello, how are you?
Good, good. Can I ask you to conduct the class while I do something for a few minutes? I'll be right back.
Oh, yeah, right. Is
Just
it
tell
just
everybody I'll be
me?
right back.
Okay.
Thank you.
No problem. Hi, Eric.
There we go, on mute.
Hi, Bob just stepped away for a second.
Okay, yeah, because I know normally we have classes, but I saw like I didn't get there was no email, and I was like, is there even a Zoom today or?
I know, yeah. It just kept saying it was going, they were waiting for the host or whatever.
Yeah,
but
same here. So that's why I was just about to walk away, be like, oh, okay, I guess there's nothing today, but
that
okay,
was that.
there we go. How'd you like the test?
Well, it was like basically the questions rehashed, right?
Yeah,
Did you-
that's what pretty much like the quizzes and stuff like that. And I like that unlike the homework, you know how we always have to do the spreadsheets. I thought there was going to be a lot of that.
I did too.
Yeah, so I was like studying for that. So I was surprised it was mainly just a lot of just the true and false, the definitions and all that. So
Yeah,
I was like,
it was
okay.
a lot better than I thought. I thought it was
Yeah. Yeah, I was like sitting there like, oh man, the first time, like I think it was Thursday night, I was like, or yeah, no, I was like, yeah, it was like Thursday. I'm just studying and all that. I'm like, oh, making sure doing all these spreadsheets and all that. And then all of a sudden,
Yeah,
I'm like, okay, well, that was sort of, I guess, at least some homework I did for myself.
I know exactly. That's how I felt too. It
Yes.
was yeah, I was doing those pre-tests. Did you do any of those pre-tests?
Yeah. Yeah.
Yeah, and those really got me in the weeds. I was just like, oh my gosh, finally I'm like, okay, I should just redo the quizzes. And so
Yeah.
that kind of helped a lot.
That's smart. I didn't even think about that because I thought like if you go and redo the quiz, I was like, oh, but I don't want to screw up my scores.
Well, I thought that, and then I asked Bob the last
Mhm.
time, and because I didn't know, and all the other students were all, oh yeah, you can do that. And I was like, well, I didn't want to disrupt my score either.
Yeah. I'm like, well, I got good enough. I'm like, well, I didn't want to go back and then maybe I forgot what I answered and I answered wrong the second time.
Exactly.
And then it lowered it. So, okay, well, that's good to know then.
Yeah. So you can retest or retake. And do you print the quizzes when you're
No,
done?
no, I just simply submit them. Because I just have my laptop. I don't actually have a printer because I just don't. I gotta get
Yeah.
one.
No. Well, you know what else you could do is you could save it as a PDF.
Oh, I didn't know that.
Well, at least on my Mac, my MacBook, I can.
I got a Mac too. So okay,
yeah, you can save it as a PDF, and then at least you can just revisit it.
Yeah, it's exactly.
Easy.
That's what I wanted to do was have some sort of file where I could go back, look at my quizzes, the homework too. So yeah. Hey, thanks for the tip.
No problem. I just discovered it too. So I'm like, we're in chapter 7 and I just figured it out in 6. So
Yeah, so I could save the PDF.
Oh, so we survived the first 2 exams, huh?
Pretty much.
yeah.
Looks like the class did very well. Nice going, everybody. And I guess we're
Cool.
going to get into chapter 7, which is a brief chapter, I think. So give me a moment here to. One reason I'm a little late here. I just got out of a 2-hour meeting with some of the other teachers.
Well, that sounds like fun.
Yeah.
Well, that's why you look formal today.
Yeah.
Yes, actually, yeah. Turns out I didn't have to dress up because Cornelia wasn't there.
Oh.
Gotta impress the boss.
Oh yeah.
Yes. Tell me about it. Come on, Neil. There she blows. We got this. Share screen. I trust you can see the PowerPoint now, huh?
Yep.
So who do we have? Oh, hi, Lauren. How you doing? Lauren's joined us. Very good. Okay. What we're going to do here is talk a little bit about cash. And a lot of this chapter is pretty basic things I'm pretty sure you all know now. I bet you all have checking accounts, huh? And you knew how to set it up. So we're going to get past, I'm going to go fairly quickly through a bunch of drivel here. But keeping in mind that some of this will be on the test before we get to the meat of the chapter, huh? What is cash? Cash is coins, it's bills, it's checks, it's money orders, it's traveler's checks, it's wire transfers, it's direct deposits, and it's credit cards. Credit cards are cash as far as we're concerned in this class, okay? Cash plays a central role in operating a business and must be carefully managed and controlled. Internal controls. You might have heard this term come up already in the class. I'm not sure. Internal controls. It's a term meant to describe the policies, procedures, and safeguards that a business takes to protect their various assets. And the one asset most people try to steal is cash. So you have to have all kinds of policies in place that ensure cash is under control properly. Everything from, if it's a store or some kind of cash business, put the money in the bank every day. Don't hold it for a week and then put it in the bank. A devious employee realizes you're doing that, you can really set yourself up for a big hit. You want to pay things by check, obviously, rather than cash. And there's all kinds of other things. Simply locking the petty cash box up or putting the cash in a safe at the end of the day. Okay. The one thing they're not talking about, though, that might be most important is segregating duties. A real important internal control is not have one person in charge of everything around a particular process. For example, cash. Money comes in the mail in the form of checks. Well, perhaps your receptionist has the responsibility, or an accounting clerk, to open that mail and prepare a deposit slip. And then the deposit slip should go to somebody else who actually makes the deposit. And then a third person should be the one to enter it into the accounting records. And the fourth person should be possibly the one to do the bank reconciliation. So these segregations of duties are really important. And I'm going to draw your attention to something that happened in Santa Barbara about 5 years ago. There was finally a denouement. There was a woman hired about 25 years ago at the police department, and she worked as an accounting clerk right out of high school or maybe a year or so of college. And she did good work and she earned some promotions. And they put her in charge of processing parking fines. Those annoying parking $40 fines you can easily find yourself paying. Well, to make things easier, they said, look, you take care of the computer side of it. You take care of the process. You do everything. It proved to be too much temptation for this woman. She took the police department for over $1 million over a period of years before they realized what had happened. And the way she did it was so simple that it's amazing she got away with it so long. You would get a parking ticket and you would write a check payable to, the city of Santa Barbara, $40. She would get your parking ticket. And because she had control of the computer process, she would go in and delete that parking ticket like it never happened. And then she was able to take that money, even though it said payable to Santa Barbara City, into her own business. And this went on for years until they finally caught it. It was a big story. Do you remember that at all, Christine? This was about 5 years ago. Yeah.
I don't, but gosh, that's
yeah, you can Google
crazy.
This. I felt so bad for the woman when I read more and more about it. She didn't say this out loud, but she probably what she seemed to be thinking was, Jesus, you practically handed me the money.
Yeah.
You separate the duties.
Yeah.
I used to work in a small office. I had 5 people working for me, and you really couldn't segregate the duties too much. And my dear controller who worked for me, Nancy, an Asian woman, she used to love to do the bank reconciliations, which we're going to see later today. She loved to do them, And every year we got in a fight with the auditor where the auditor said Nancy can no longer do the bank reconciliations as long as she's also doing the computer work and some other things. And that was always a funny little battle. Internal controls. Do you know how to open a checking account? You go to a bank, okay? And you say, I want to open up a checking account, all right? Opening a checking account. Okay. Even today, though, you have to fill out a card like this, I bet, huh? Even with everything computerized, you probably had to fill out some kind of card, and they ask you to carefully write your signature so they can match it up if necessary. Signature card, deposit ticket, deposit slip. We understand that the number, this 000 number, this is called the ABA number, the transit ABA number. And that's the number that identifies your bank. It'll be a number you need to know if you're going to do deposit transfers, things like that. Endorsement. What's endorsing a check? You just sign the back of it. Okay. But there's different types of endorsements that we like to ask you about come test time. Types of endorsement. A blank endorsement. You get your paycheck you get your paycheck from your boss, and you sign your name on the back of it. That's called a blank endorsement. That makes the check payable to anybody who gets their hands on it. In other words, if you put your name on that and on your way to the bank, somehow the check falls out of your pocket, somebody can pick it up and have a pretty good chance of cashing that check. Because the pressure's off the bank. They see a signature, they may cash it. Hopefully you still have a little bit of protection, that banks do a little bit of due diligence, but the blank endorsement can lead to big problems. Restrictive endorsement. I got in the habit of doing this forever. For deposit only. Okay. Well, if you lose it, the worst thing that can happen is the crook will put the money in your bank account for you. Or you're not going to have to worry about it. Okay. So for deposit only, or you can be more specific, pay to the order of a specific bank or a particular person. Pay to the order of Bob Smagula at the downtown branch of Santa Barbara Bank and Trust. That might be a little bit too much internal control, but you get the idea. So you have blank endorsements, restrictive endorsements. There you go, for deposit only. Do we all know what an ATM is? Do we know what a PIN number is? Okay. I'm guessing we do, and I'm not going to talk about that, huh? It's important for the depositor to keep an accounting record of ATM withdrawals and deposits. If you're like me, when I go to the ATM and I take out $40 or $100, I get very annoyed when I see it on the bank statement at the end of the month, because I never remember what I pulled the money out for, I just know I did it. Writing checks, huh? You see these three terms here: drawer, drawee, payee. Let's just know them for the test. And this still confuses me. I always have to think about it for a second. The drawer, the depositor who orders the bank to pay the cash. I work for City College. City College is the drawer. They're the depositor. The drawee is the bank, and the payee is the person to whom the check is written. Okay. Drawer, drawee, payee. That's 3 points on the next test, I can guarantee it. Steps in preparing a check. Well, you got a check stub or register or automatic. Under today's accounting systems, it's very unlikely that your system will let you write a check for a different amount than it is in say QuickBooks. Let me ask you, Christine, let me ask you this question. Maybe you're using QuickBooks right now.
Mm-hmm.
If you have a bill out there for $50
Mm-hmm.
and you want to pay it, can you just make a partial payment on it?
Yes.
Could you pay more?
You can, but I don't think, I've never tried that.
Yeah. I guess my point is your systems today shouldn't allow you to
Yeah, I don't know. I don't think you can.
But in the old days, that was always a problem. You write a check for $248.13 and you enter it at 284, and now you're off by a divisor of 9.
Yeah.
And the check should not be signed until the check signer has verified that the check is correct. Okay. There's a check. How about that? Bank statement. Here we go. Now we're getting into a little bit of meat here. We're going to talk about the bank statement. The bank statement comes hopefully at the end of the month, not necessarily, but the end of the month. And it's always going to show the beginning. It's always going to show the beginning balance, and then it's going to show the detail of the deposits and the subtractions, the pluses and the minuses, and then it'll show the ending balance. In other words, it starts at the beginning and it goes detail in chronological order. And so you used to get the canceled checks in the mail back. I don't think people do that anymore, do they? You get you do that at your company?
No, I'm thankful because I have clients that don't, I have to enter the stuff from the statement.
Oh, okay.
So, yeah,
Yeah.
they do.
But usually they'll give you just a picture of the check, some kind of facsimile,
Yes.
and other forms you might need, right?
Mm-hmm.
Bank statement. Look at a bank statement, huh? That's a bank statement, huh? The reason I'm pushing this a little bit is when we get into the bank reconciliation, we got to be able to navigate this thing. But a bank statement will always have a beginning balance, and then they'll show you the summary of the pluses and the summary of the minuses to the ending. And they usually break them out nice and neatly for you. Here are the deposits we made and the withdrawals. And then you come down to your ending balance, okay? Bank statement. Here we go. Now we get some good stuff. Bank reconciliation, huh? The bank reconciliation. Possibly the most important internal control regarding cash. The bank reconciliation. On any given day, the balance in your financial accounts, the balance in your books, your checkbook, is not going to be the same as what's in the bank because you have timing issues, right? The bank doesn't know that you wrote a check today. They're not going to get that check maybe for another 2 weeks, possibly. Just like you don't know that the bank has found a bounced check. Just like you don't know the bank is charging us interest or a late fee or something. So we need to prepare what's called a bank reconciliation. And we're going to take the balance per the company, per the checkbook, and we're going to adjust it to a number that we're going to call the adjusted company balance, if you will, or the adjusted checking account balance. And then we're going to go to the bank side and we're going to take their balance at the end of the month and do reconciling items till we come up to their adjusted balance. And those two adjusted balances must be the same. And if they are, you've got pretty good control of your cash, okay? Because you've accounted for every single penny as of the end of the month, okay? And we understand that there'll be differences due to timing. Terms to understand, not too hard. Deposits in transit. A deposit in transit is a check we received from a customer that the bank has not cleared yet. It's a check we've received. We've entered it into our checkbook, our computer system, but we didn't bring it to the bank until after the bank statement was published. It's the end of the month, you're busy. You open up the mail toward the end of the day and there's 10 checks there and you enter them in your system on Friday the 31st. You put them back in your desk drawer and then you bring them to the bank on Monday or Tuesday. But by then, the bank had published the bank statement, which you got that, say, Saturday. Deposits in transit, checks written by customers not cleared by the bank. Outstanding checks we wrote that the bank is not cleared yet. Outstanding checks. So when you're doing a bank reconciliation, you're going to have to look at every single number that's on that bank statement and compare it to your checkbook. And you cross off the ones that match up until you find the ones that don't. And those are called reconciling items. Service charges. Well, you never really know the service charges on a lot of bank accounts until the end of the month. So these are kind of the main differences we're going to have. Collections, the bank could have collected something. One of your customers, for some reason, maybe direct deposited the money directly to your bank account and you didn't know that. That'll be a pickup. An NSF check, a bounce check. This is a check written by a customer. We don't bounce checks. Our customer sent us a bad check. We deposited that money in our banking account. We got $200 and we put it in the bank. And then the month end came and we found out the check was no good, that the bank, reversed that. So that requires activity. And then they're talking about errors made by the bank or by the depositor. We're not going to talk about errors made by the bank, except in this particular presentation. The bank doesn't make mistakes, believe me. Any mistakes are 99% of the time us doing something wrong in recording information, okay? The banks are not infallible, but I've never really found them screwing up like this chapter seems to think. Okay, you ready for the bank reconciliation now? And this is the guts of the chapter. In order to do the bank reconciliation, there's a specific template I'm going to recommend, which is pretty normal, and it's included in this presentation. First thing we want to do maybe is reconcile the bank side, because that's the easy piece. The bank side's easy. You take the balance per the bank at the end of the month, you add the total of deposits in transit, you subtract the outstanding checks, and you're done. That's all you have to do on the bank side. No journal entry needed on the bank side, because anything we're telling the bank, obviously we already know and have already entered it. And that's what the bank reconciliation process can be thought to be. We're telling the bank things they don't know, and the bank is telling us things we don't know until we get in sync together. Identified deposits in transit. You compare the bank statement with last month's deposits in transit and this month's. In fact, you might have a deposit for a small amount that you forgot to bring to the bank 2 months ago. Well, you're going to have to keep it on your outstanding deposit list. And the deposits listed in the accounting records, if they're not on the bank statement, it's a deposit in transit. And individual deposit amounts in the accounting records, if they differ, they need to be corrected. There they're talking about our mistake, huh? So deposits in transit, checks written by our customers that we haven't mailed into the bank yet. The bank has not cleared them. Outstanding checks, the same exact thought process. Compare the canceled checks. You're going to have to go one by one, every single check. And then you mark that the item has cleared the bank. Checks that have been written but not cleared are outstanding checks and get subtracted from the bank balance on the reconciliation. And here they're talking about other banking type mistakes. I'm not going to worry about, well, they're talking about compare any additions or deductions on the bank statement that are not deposits or checks with the accounting records. That I'm going to skip that one for a reason. Okay. Hey, you ready for the first bank reconciliation? All right. I hope you like to do them as much as Nancy Howe used to like to do them, okay, back in the day. So see what they're giving us here, some information. They're telling us that the deposits in transit were 637.02. Deposit in transit, just one, 637.02. They had 3 checks outstanding, and the amount of those checks is going to be subtracted from the bank balance. So they'll have to give us that information a little bit later. And then they've got a check number that was put in incorrectly, and then a withdrawal from the ATM we didn't record, blah, blah, blah. So we've got the bank returning an NSF. We've got all kinds of things here. You know what I don't see, though? They don't give us the beginning balance, the beginning balances. But I guess we just have to rely that this is correct here, okay? What I'd like you to do is look at the template, okay? By template, I mean the picture. What are we doing? We start with the bank side first, only because that's super easy. The bank side is simply the balance per the bank at month end, plus all of your deposits in transit, minus all of your outstanding checks. And that's all you do on the bank side. I'm not saying it's super simple. You know, if you're a big company and you're writing hundreds of checks a month, well, you need to still go through every single check one by one. I know Christine's using QuickBooks, and I remember doing the bank reconciliations. You're always clicking off the check that cleared, right, Christine?
Yeah.
You know,
Yeah.
you see, okay, I see checks numbers 803 to 815 cleared. You know, whop, 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 and you just knock
Yeah.
them right off and go through it that way. So the bank side is not too tough. The book side takes a little more thinking, because now we are learning things we did not know. Now the bank is telling us something. So we're looking at that bank statement and we're saying, well, that was their balance, 1748.09. Our balance at the time was 2393.23. And what we're going to do is we're going to add certain reconciling items and subtract certain ones. So let's go back and take a little look here. Let's see what they're saying. Well, they said that the deposits in transit and the outstanding checks were these numbers. Everything else, it looks like, is something we didn't know that we're learning from the bank reconciliation. Check number 214 was written for $18.98. But we entered it by mistake as 1988. We thought we wrote a check for 1988, and that's what we recorded in our financial statements. It turns out we only spent $18.98. So that's a 90-cent pickup, if you will. 90 cents. Where do I, how come I don't see it? Oh, there it is right there. Can you read those numbers? Oh, anyway, I can make it bigger real quick. Yeah, 90 cents. So that's called a reconciling item. That's 90 cents that the bank took out, or in this case gave us, and now we're catching up to the bank. Let's see what else we have. There was an ATM withdrawal that wasn't made. We just found that out at the end of the month. The boss went out and one day took $100 out of the ATM and never told anybody. Well, now the bank is telling us. The bank is telling us. So we know that $100 has to come out of the checking account. And now here we go, a bounce check and a service charge. A bounce check of $200, huh? Maple Company bounced the check. Well, that's money we no longer have. That's money we no longer have. So that has to come out of our checking account. And there's the $1.80 service charge. When we add the pluses and minuses, we come up to 209,233. 209,233. That simple template is what I'd like you to have in your head, because on the test, they might give you a question that is, the beginning balance per the bank was $100. The ending balance was $1,000. The deposits for the month were $12,000. How much were the outstanding checks? And you just have to solve. They're giving you 3 of the 4 numbers, okay? Now, a super important point to make. On the book side, on the checkbook side, our side, each of these transactions that are off require a journal entry. A journal entry. Because the balance at the end of the month should be 209,233 after we adjusted for the bank. So we're going to have to write journal entries for each one of these reconciling items on the company side, not the bank side. Only 2 kinds of items appearing on a bank rec require journal entries: errors in the depositor's books and bank additions and deductions that you don't know about. And that's what we were just looking at, okay? All items in the book balance section of the reconciliation require a journal entry. I'll repeat that. All items in the book section, the company section of the reconciliation requires a journal entry. So let's see what they did here. Let's get some journal entries. Remember this one? Assume that $18.98 was in payment of an accounts payable that was recorded incorrectly for 1988. This 90-cent item is an error in the accounting records that occurred when the check amount was incorrectly entered. Well, it just so happens that this is an entry that I guess you could call it favorable. We had found we had 90 cents more than we thought. So we debited 90 cents and we credited 90 cents because I'm willing to bet we did owe this customer $19.88. That's what we did owe the guy, but we only paid him $18.98. So by reestablishing that cash and accounts payable, we're prepared to pay the balance. Okay. Make a little bit of sense, Eric?
Yeah.
All right. Let's look at the next one. Okay, the boss took money out. Well, looks like that was for drawing. You know, at the end of the month, you're looking at the bank rec and you say, uh-oh, somebody took money out on November 12th. And, you know, you grab the boss and say, did you do this, boss, this $100? And he said, oh, yeah. And he or she starts going through their pockets for the receipt. Once you know what it's for, you can record it. They, you know, they told you that was their money to go to a racetrack or something, okay? Debit drawing and you credit cash. By the way, I used to work real close to Santa Anita Racetrack, and we went over there all the time after work for catch the last couple of races.
I used to go to Del Mar.
Oh, Del Mar's beautiful. Don't get me started.
yeah.
Don't get me started on this. The bank reconciliation, journal entry. Remember the bounce check? Okay, that's money we no longer have. We got a check from somebody and we deposited it into our bank and we put it into our financial records and everything was good at that point. And then a week later, the check bounced. So the bank said, whoa, I'm taking my $200 back from you. We have to then write a journal entry for that difference. And very likely, we're assuming it's a customer who paid down an invoice. In other words, we sold something to this guy for $200 and the deal was he would pay us in 30 days. So when we got the money, we debited cash and we credited accounts receivable. Now we're just reversing that. We're setting the receivable up with a debit and crediting cash. And now we have to go after this guy for $200 plus probably a bank fee. There's usually charges for that kind of thing. And there's nothing more annoying than that when a customer of yours bounces a check and now you have to pay a penalty for it. And it's the way the world works. And I guess this is the last one. Remember we had that $1.80 bank service fee? Well, that's an expense. And that's an expense that we could call bank service fees. We can call it bank service charges, all kinds of different names. Here, they're just going to call it miscellaneous expense, okay? Miscellaneous. You don't want to see too many dollars in miscellaneous. Nothing will get the auditors hepped up more when they walk in and they see that your biggest expense is miscellaneous. Because then they're gonna dig that down to the penny. You know, they'll think you're hiding something miscellaneous. So it better be for tiny stuff. Electronic banking. I don't think we need to worry about this. We do electronic banking. That's a very, very brief look at the bank reconciliation. I would suggest when you're doing your homework tonight, have that grid in front of you. Have that PowerPoint or something from the book where you know the bank side is easy. Bank balance plus deposit transits minus outstanding checks, you're done. And then you go to the other side, you take the balance per your checkbook and you pick off anything you see on that bank statement that you're unaware of, okay? We're going to finish up this fairly quick chapter here. Petty cash. Petty cash. Do you have petty cash? You probably don't have petty cash at your business, do you, Christine? Petty cash is usually just a tiny metal box, really, a recipe box almost. And it's meant to pay the smallest of expenses that pop up all of a sudden, okay? Petty cash. You're going to assign somebody to be the petty cash custodian. It's often an accounting clerk, could be a receptionist. And this person is going to be given a check, say for $200. You're going to write a $200 check payable to Eric. And then Eric's going to go to the bank, his own bank, and you're going to cash that check, Eric, and you're going to break it up into maybe 6 $10 bills, some 20s, coins, set up a cross section. And there's an accounting entry for that, which we'll show you in a second. The petty cash fund, it's for very small amounts that are inconvenient and inefficient to run through your accounting system. The UPS guy shows up and he wants $4 to cover postage. We're going to tell the guy, come back in a week and we'll hand you a check. No, you can just give him $4 real quick and he'll sign a receipt that goes into your petty cash box. So first thing we do is establish the petty cash fund. Now think of petty cash as another cash account. Okay? Think of petty cash as another cash account because it is in your general ledger. In fact, you're going to debit petty cash and credit cash. That's the journal entry just to set it up. And it's going to be money in a particular amount. The custodian will cash the check, not paycheck, and place the money in a petty cash box. And the custodian should be the only one authorized to make payments from the box. And there should be company rules too. Anything over $10, we don't touch. Or maybe make a little more. Anything over $20, people have to wait. We're not going to pay a fairly large amount like that from petty cash. And here is your journal entry. Debit petty cash, credit cash. Establish the petty cash fund. Once you do that, you will never debit or credit petty cash again. I'll repeat that. Once you set the fund up, you'll never debit or credit petty cash. The only time you will touch it is if you decide you need to have a $200 fund or a $300 fund, okay? After you set it up, all transactions are going to go through the regular cash account. This is very typical, petty cash voucher. You can buy these from Staples or Office Depot, anywhere. And they usually come in a pad and they could be pre-numbered. These are not pre-numbered. I see somebody wrote the number 2 on it, but maybe you don't even need a number. Somebody comes in and says, the UPS guy is waiting in the lobby. He needs $5.08. Well, you take the $5.08 and you fill out the slip very quickly. And then you have the UPS driver sign it, or whoever the heck it is, and you pay the $5.08, you're replacing the $5.08 in coins with a $5.08 receipt. Okay? So that petty cash box has to equal $100 every single day. It has to be $100 every day, either as a receipt or cash that still remains in the petty cash box. Okay? Now, with the petty cash box, we are not going to record this $4 whatever this one is here. This is a big one, I think, $25.75. We're not going to record that same day. With petty cash, you wait until the end of the month. And then there's a petty cash report. Excel sheet, nothing too fancy, Excel sheet. And it might have postage as a category. It might have delivery fees. Could have donations. And you just drop these numbers in your petty cash report. And then at the end of the month, you add up the petty cash report. You add the petty cash to the receipts, and they should equal $100. So at the end of the month, if you had $15 in cash in your petty cash box, you should have $85 in receipts. And then you turn that over to the accounting people and they'll cut you a check for $85. There you get the next check for the next month, $85, and you go to your own bank and the process repeats itself, okay? Petty cash. I was with a place, I wasn't with them long, it was more of a consulting thing where somebody stole a petty cash box and that just infuriated me. Wasn't my responsibility, but it still annoyed the heck out of me. You leave something on a desk, it just raises temptation too much. Keep the petty cash box locked up in your drawer all day. Only take it out to make the transaction and lock it up again, lock it up in the safe. Petty cash is easy meat to steal. And your petty cash report, unfortunately, they don't show a report here. And I'm not going to show it either. I'll just describe it. And maybe in our next class, I'll bring the report up. It's just a multi-column piece of paper, and it has the beginning balance of $100. And then the next column is postage, $3. Next column the next day is deliveries, $5, donations. And at the end of the month, you have everything broken down by your chart of accounts, by travel, entertainment, postage. And that's what you use to record the journal entry for petty cash. Petty cash activity is not recorded until the very end of the month. And how do we replenish it? When the fund runs low or at the end of the accounting period. To replenish the funds, debits are made to the appropriate expense accounts. Okay. You had $100 in the till, and then day 3, there was a UPS driver who needed $8. So you gave him the $8. And then 10 days later, your boss says, we're donating $20 to the Boy Scouts. And that's the only activity you had. So at the end of the month, your petty cash report will show 8 plus 20, $8 you're going to debit to UPS, and $20 you're going to debit to donations, okay? To replenish the cash account, debits are made to the appropriate expense and cash is credited. Remember what I said? You never touch petty cash once it's set up. Only if the amount of the fund itself is being changed would you touch petty cash. Otherwise, no. Because the petty cash payments record is not a journal, no posting is done from it. A separate entry must be made in the financial statements. And here we go. Run through a couple of scenarios. At the end of the month, the petty cash fund had $11.20. And to replenish it, we filled out our report, and we had $20 for this, $30, 80 cents, whatever. And those receipts added up to $188.80. We had 8 receipts, and we are going to have to record that with a debit to the various expenses. And remember, a credit to cash for $188. So let's take a look. There's your journal entry. Look at the journal entry. How much money did we spend? $188.80. You're looking at your report. Here's your report summary. Automobile expense 40, postage, travel, miscellaneous, drawing, etc. That's what you do at month end. You write a check, and now you put the $188.80 back in the box, and you have exactly $200 to begin the next month, okay? Some of the rules with petty cash are limits on the amount you can take out. You know, if you have a petty cash box of $200 and you find yourself replenishing it every 3 days, you've got a big problem. You have a big problem. You are either in need of a much bigger petty cash box, or more likely you're paying bills that should be paid through the normal checking process, which is more secure, okay? I remember that was a question on CPA exam. They had 4, the question was, which of these indicates a problem? And 3 of them, to me, made sense. And the 4th one was, this company turns the petty cash over every week. And then it kind of hit me, no, that's no good. They're spending, you know, they're not using petty cash the way it should be. That was the answer. Okay, petty cash. Now I can go into a lot more detail with petty cash and the change fund, but I'm not sure you guys could stay awake through that. Let's just get the basics done here and make it a little more challenging, huh? Establish a change fund. I bet I'm talking to the whole class now. I bet most of this class has worked in a fast food environment or in a store and you ran a cash register. You ever run a register, Eric?
Yeah.
All right.
Yeah.
Well, when you came to work to start your shift, there was already money in the till, right?
Yep. And you had to count it
And you counted it.
and
And that
log
was,
it.
there you go. You're exactly right. You log it and swear. And
Yeah.
that money is the change fund, we call it. Okay. So at the beginning of the day, you've got $200 sitting there. And then during the day, there's activity. Pretend it's a restaurant. People are coming in, they're paying, they're paying in cash for some of their meals. You're making change all day. And the change fund, it's some currency and coins. And at the end of the day, the cash received is going to be deposited. We decided that was a good day. So we're going to deposit everything except the $200 that you leave there every night. Okay. How do we do it? Well, we have to establish the change fund, cash register change fund. We debit change fund and we credit cash. So that's your third cash account. We now have three cash accounts: cash, petty cash, and the change fund. Okay, we got the change fund going. So let's take a look at three scenarios here. At the end of the first business day, there is $1,450 in the cash register, okay? At the end of the day, we had $1,450 there. Well, we know we had 200 to begin with, so we're going to leave that behind. That means your cash sales for that day were $1,250. $1,250. Look at your journal entry. We debit cash and we credit fees or whatever, okay? Cash short or over. Guess what? You're not always going to come out even, right, Eric? There are going to be days where you're off a little bit. Hopefully not too much, not too often, not too big.
Yeah.
Let me just close the window here. Yeah, when you work in a cash register, you're going to be over and short once in a while. It's normal noise in the system. So let's see how we handle that. Here we go. At the end of the day, there was 1161 in the cash register. We started off with $200, right? So the sales were 961. The difference between the cash in the drawer and the beginning balance would represent your sales. Sales. That's what's on the cash register tape. So you're going to credit sales for 961. The problem is, though, the cash register's tape is $2 more than the cash sales, as indicated by counting the cash. You counted the cash and you're $2 short. Look at your journal entry, please. You debit 961 for cash. And you have to debit the cash short over account, which is an expense. It's either a gain or a loss account, depending on which way it goes. And you credit the service fees for 963. What I like to emphasize here is whatever the difference is between these two numbers, that has to be the amount of cash you're going to, be recording. But you really had sales of 963. So there's a $2 shortage, which is pretty common, I would imagine. You're making change all day, you're talking, you're getting distracted. When you run a register, you're not just running the register, you're probably running around, you might be waiting on tables or something as well. So it's not the easiest job in the world. Over, so that was short. Here we go, over. We have $1,015 in the cash register. How much did we have to begin with? 200. So we know we're going to debit cash for $815. We're going to credit cash, but our sales were only 814. We are over by $1. We debit cash for 815. Remember? Oops, I'm sorry. Remember the difference between what was in the drawer at the beginning of the day minus the total is our sales number. Any difference is cash short or over, okay? I'm not going to go over this at all to any extent. I just want to show you a couple things real quick. I want you to know this for your own purposes. And if I was making up the test, I would put this on the test. Has anyone ever heard of the Sarbanes-Oxley Act?
Yes.
Okay, do you know where this came out of?
Enron?
Exactly, Eric, you get an A for that, absolutely. Enron, the largest corporate financial fraud in world history.
Yeah.
Yeah, and they were it turned out they were in cahoots with the Arthur Anderson auditors. Did you ever see that movie? There's various movies on it. And I've read about 2 or 3 books. It's just fascinating.
Yeah, I read a book about it, but not the movies, no.
Yeah, boy, I tell you, these guys were awful.
Oh yeah.
They would set up different phony companies, and they were moving money around. And the president of the company, Ken Lay, he had the courtesy to die in prison before they could sentence him, which was nice. And the vice president, Jeff Skilling, the guy who really was the mastermind, I believe he's still in jail. He's serving like an 18-year sentence, and he hasn't gotten a break yet. And then the third guy was a guy named Andrew Fastow, and he was a bum from my area of New Jersey. I mean, I never knew the guy. He's much younger, but he was from Chatham. He was from, Chatham, New Jersey. You can't trust those people from Chatham. And he went to jail for a while. But yeah, Sarbanes-Oxley was awful. They killed people, this company. Did you know that? Do you remember reading about the energy failures in different cities, including Santa Barbara? One thing that Enron did was they traded in natural gas, they traded electricity. So they would call up the city of Santa Barbara generator person, and they would say to the guy, you have to take the grid down in about an hour for an emergency. And the guy said, there's no emergency. And they say, look, there's an emergency. And, he was in cahoots. They would take the grid down, and the result was Santa Barbara would be out of power at that point. At that point, Santa Barbara needed electricity badly. And so Enron would say, oh, that's okay. We've got plenty. We'll supply it to you at a price like 4 times what you normally would pay. So that was one of their biggest scams. When the power goes down unexpectedly, elderly people were in peril. People died who were on oxygen. Man, you get the idea. Sarbanes-Oxley. Paul Sarbanes was a congressman from Michigan, I believe. And Sarbanes was a senator, I believe, and Oxley was a House of Representative guy from Maryland. And what this act does is place the responsibility on management for the reports. Believe it or not, before Sarbanes-Oxley, the president of the company goes, look, I'm an idiot. I'm just the president. I don't know anything about the numbers. That was Christine. Talk to her. And even Christine could then say, well, I made a mistake, big deal. And there was not much they could do. And now there are some severe penalties. Can I look up something here real quick? No, I don't want to. Let me just experiment real quick with something. I'll get us out of here. Okay, please. Thanks for hanging in there with me. Okay, hold on real quick. Can you hear this? Can you hear Christine?
I can't.
Yeah, I don't hear it either.
Okay. Anyway, what that was, and you could Google it just like I did. That was the famous call that was recorded between two energy traders joking about taking the system down and joking about the old lady who died, who they decided to call Grandma Millie. And if you want to hear the word F used a lot in a conversation, these people were, they were so despicable, so despicable. Okay. Well, I guess on that happy note, we can call an end to our session today. Okay.
Sounds good.
So this
Sounds
one's not too
good.
tough, but you become experts in the bank recs. That's a nice little skill to have in your quiver. Okay.
Oh, definitely.
All right. I'll let you go, guys. You have a good one.
Thank you. You too.
You
Bye
guys.
bye.
Bye, guys.